Yo, it is the stock market recap where I teach you how to use technical analysis. So let's jump into the charts and let's see if we can get any clues for what could happen next week. Thank you for checking me out. I appreciate it. I also have online chart reading courses to teach you how to read these charts and give you the confidence. That's all it really takes. The confidence in order to do this and do it to feel great about your findings. So check that link below, check that out, and let me know if you have any questions. All right, so let's jump into these charts. First chart we always take a look at S&P. S&P closed at 4,677.03. Record high was made the most recent week of 4,818.62. Last week we left off, we mentioned the shooting star. All right, so we made the shooting star candle, and then the following week after that, which is the most recent close, we pushed higher, and then all of a sudden we pushed lower. And now we have a bearish engulf. And we covered this before in the past. The bearish engulf is a bearish reversal signal, or at least a stall in the current trend. So what you're looking at is the trend potentially starting to end here. And will it? Now, I think next week we'll continue to move lower. We're going to end up testing out that 4,600 area where we've had support in the past. We're going to see if it's going to hold up. So I think S&P will continue on its path lower the next week. And if that holds up at 46, that'll be a great sign. If not, I think we come back to test one of these levels here at the 4,400 area. So that is the S&P. Let's check out the Russell, and we use ticker IWM. IWM closed at 216.07. Record high was made weeks ago, 244.46. So last week we talked about the doji candle that was made below the 20-day moving average and 50-day moving average, and I said I didn't like that sign at all, and that's confirmed. We moved lower. We closed at 216, and we are forming what's called an H pattern here, and that unfortunately is a move lower that's in the works here, and that would put it around 200 if it does continue to move along. So once we have this break here around this 215 area, we're likely going to move to test 210, and momentum will likely go through 210. So I also see IWM starting to move lower and potentially testing out 210 at the very, very bare minimum, and then likely it will move lower from there to probably get to 200. That's IWM. Let's check out the Dow, and that is $DJI for those of us on Think or, oh, what happened there? Think or Swim. So the Dow closed at 36,231.66. Record high was also made the most recent week of 36,952.65. Last week we talked about the pseudo shooting star, and then it followed up with an actual shooting star the very next week. So we moved higher, and then it did not hold, and we pushed lower again. Now we're still above the support level that we've drawn here. If I want here, we can actually do something in this area here and see if this holds up. But I think we're going to end up moving lower on the Dow as well. That shooting star had a decent amount of volume behind it, and I don't see anything else really holding up the Dow, ladies and gentlemen. I think that this will continue to move lower, next week as well, and we'll likely test out at least the 35,700 area. So that's the Dow, and then let's check out the Nasdaq, and that we use ticker NDX. The Nasdaq closed at 15,592 and 19 cents. Record high was made weeks ago, 16,764.86. And then we talked about the shooting star made here last week and how it wasn't a good sign, and it did move to test the area we pointed out last week around that 15,700 area. So we're at 15,592. We're in that area that we thought it would test around the 20-day moving average. So that's going to be it for this week's market recap. Everything is moving lower. That's the good night. With the market, we've seen S&P make a bearish engulf. Last week it had a shooting star. This week now it has a bearish engulf. We got the Russell, which is also looking to move lower with an H pattern. We've got the Dow that made a shooting star candle. And then now we have the Nasdaq, which made a shooting star candle and is starting, well, not a shooting star, I'm sorry. It just made a very large red candle from the shooting star that was made last week. So all four indexes are showing weakness in the beginning of the year, and it is likely that we're at least going to have a pause in the market for the trend, which isn't bad. We've had a very long run. Very, very long run, and a pause is definitely a good sign because that allows people to get off the train and then get back on the train. So take advantage. If you see any good deals out there, make sure you lock them in and let it ride. So that's going to be it. Get outside if it's not cold. Enjoy your fresh air at least for a little bit. Get your exercise and make sure you stay hydrated. Drink your water and spend time with your loved ones, because health is wealth. Get your laughter, which is also the best medicine, and we will check you later. All right, peace.